Welcome back to the channel. My name is Patrick, and in today's video we're going to look at what step 2 is in the process of getting funded. In this A to Z guide of getting funded, what is step 2? So step 1 is to open an account, figure out what we want, open an account. Step 2, before you get trading, before you start trading, is to have a trading plan. Okay, nothing we do in this world we shouldn't plan ahead for. Seriously. That's the way I approach life. No matter how big or how small it is, you need to have a plan. And if you go into trading without a plan, you're going to quickly learn the need for having a plan. Okay, trading is very simple because you could press the button and be in and out of a trade very easy and make a lot of money. But it's difficult because of some of the things that we are unaware of. Okay, so we need to consider our strategy. We need to have a winning strategy. We need to have good risk management, and we also need to address the psychological aspects of trading that affect us. Remember, 95% of traders fail. There is a reason for this. So don't ever think it's that simple. You just press a button and become a millionaire. There's a reason people fail. So to combat this, to get around this, is to have a solid trading plan. Okay, so what I'll do here is give you a glimpse of what my trading plan is, and just so you have some fundamentals. So if you haven't got one already, you need to get one done. Okay, whether putting it down on a spreadsheet, whether putting it down on an Excel sheet, or jotting it down on paper, on your phone, whatever it needs to be, you need to have something to refer to when the waters get murky. Okay, because you can get lost in trading, so you need to be able to refer to something to guide you out of the the chaos kind of thing, of the maze. Yeah, so I'm going to share with you some of mine, and then we're going to switch over. We're going to have a look at the charts and see if there's anything available. If there is, we'll be doing a live trade, so stick around for that. Okay, if you find this useful so far, again, know what to do. Hit the like button, hit the subscribe button. I keep on getting out these videos. So trading plan, step 1, only trade your strategy. Okay, so only trade your strategy, your setup. So at this stage, before you start taking trades, you should have already back tested your preferred strategy. You should know the win rate. You should know when the best time to take the trade, what your best pair is, you should know it in and out. You should know, because it's your go-to. And once you found something, you record all your statistics, all the trades you've taken, and then you use it as a reference point. So you know you've got a 40% win rate. You're going to take more losses than you're going to have wins, but your wins outperform your losses. Or you got a higher win rate, 70%. You're scalping. Okay, you're in and out of the market. Therefore, you're looking for quick trades. You need a pair that moves quickly, and so on and so on and so on. You need to have a concrete strategy, and you need to know it ins and outs of it. When's the best time to trade it? All of that. So step 1 is to know your strategy. Only trade your strategy and know it in and out. Okay, and the reason is because on our journey we are going to come across stumbling blocks, right? We're going to have moments that we go on a losing streak even, yeah. And you're going to start searching for answers, and you're going to go on YouTube and you're going to find 100+1 different ways of losing. Okay, because everyone has the perfect strategy on YouTube, and some of them don't actually trade it. So you need to have done your own statistics for you to rely on, for you to fall back on. And that's why it's important to have a solid trading plan, and that's why it's important to have a solid strategy that's been back tested. So if you do come across a period of trading where you get a little bit lost, you go back to it and refer and see if you've been following your trading plan or not. So strategy, step 1. Okay, step 2, let's do it like this: avoid trading news. Okay, so very simple, don't trade during high impact news hours. Okay, because at that point the market is meant to be unstable. It could wick up, it could wick down. It doesn't know how it's going to react to the news. But in some situations they've already priced in the fact that the fundamentals, the news impact's going to come in and it's going to create a lot of increased volume in the market. So they may have already taken price to where they want to take it to, and they spend an hour or two or even 4 hours drawing people in by consolidating, wick up, get everyone out, wick down, get everyone out, and then breakout traders who maybe try and chase it get chopped up in the whole process. It happens a lot. Don't take my word for it. Have a look during high impact news periods. You'll see it messes around with you. So it doesn't matter how good your trading plan is during news. It's over. It doesn't really matter. It's the easiest way to lose an account. So avoid it. Okay. So number 3. Let's see. Let's get this right. Only one session. Okay, so trade only one session. So we have London session, we have New York session, we have the Asian session, and we have tons of different sessions, okay, based on different countries and their time periods. And we've got the main 3 ones, and the main impact ones is the London session and New York session. Whatever your time zone is, whatever your preferred time to trade, whatever strategy you've traded around these times, try to focus and only trade during your session. The reason is because most of the times the next session tries to run the liquidity on the previous session, whether it's the highs or the lows, before it goes on in its direction. Okay, so if you're trying to trade across, you don't know what's going to happen with the new session. You don't know what direction it may change towards. Okay, so get used to focus on only trading your session. Learn the behavior during that session. Is it slow? Is it fast? And also, what you need to be conscious of is just being able to focus on one session, because it leads you to avoid over trading. It's very easy to trade from 9 a.m. to 9 p.m. if you lack discipline. But if you focus on only trading one session, and in that session there's usually one setup, it could be yours, and it's usually within the first hour or two, and if it's not there, it's not available, maybe it's in the next session, and you then only trade that next session. Whatever it may be, try and focus on trading one session, because it helps you avoid over trading. Okay, that's a very important point, over trading. Okay, and you can see a lot of my trading plan, or a lot of the rules, if you like, is based on over trading and over leveraging, because these are the 2 areas that most traders struggle with. So we're going to try to combat that by putting a solid trading plan based on our experience to avoid getting caught out. Okay, so once you have this in place and you are disciplined and you stick to it, all you really need to focus on is your entries, and that's where we want to be. Okay, so I'll touch on that again later. So again, if you're scalping or even swing trading, you really want to try to avoid over trading. So how to do that is to trade what I put here is trade 1 to 2 trades a day. Okay, 1 to 2 trades a day as a max. Okay, as a maximum. You do not, if you're scalping, you may believe you need to take multiple trades a day. If you do that, you just create a pattern of over trading. I tell you now from experience, you just create a pattern of over trading. And even if you are up, when are you going to stop? What's going to stop you? Just continue, because the market shows you a lot of things. You could find things. There's a lot of pairs and there's a lot of price action. When are you going to stop? The only way you could stop is by having it putting down as a rule and following your trade plan. Okay, so you need to develop discipline by following your trade plan. So a good way is not to overtrade, is only 1 to 2 trades maximum a day. I'm trying to focus on doing 1 trade a day. The only time I may do 2 is if I've taken 1 loss and I'm waiting to see if I can find another setup to get that second. So maybe I take 2, but my focus is 1 a day. And also in the future, when I have a reasonable account size, I'm not looking to trade every day. I'm looking to take 1 or 2 trades a week. Okay, so 1 to 2 trades a week. If I make something like $500, that's $1,000 a week, that's $4,000 a month. I'm okay with that. and imagine if it was a larger account size where I could make 1,000 per trade. It is possible. And if you're doing these kind of numbers, do you really need to take more than 1 to 2 trades a day? So what I'm trying to get myself ready for is how I'm going to trade in the future. Okay, so getting funded, getting passing that evaluation stages, all of these things is just a part of the journey. I'm thinking long term. Okay, so number 5, let's see. None of these are in any particular order. It's just what I've come across and I wanted to share with you guys because it's quite important and it's helped me. So hopefully it helps you as well. Okay, so risk management. Okay, risk management. Now, risk management is, it's like having a trade plan. Okay, it's every setup, you know where your stop loss is, you know where your TP is, you know how much lot allocation you're going to use per trade. So you need to have a real look at risk management. Risk management is a major thing. Okay, like I said, this isn't in any particular order. You need to have a good strategy, you need to have good risk management, and you need to be able to deal with the psychological effects of trading. Okay, risk management will help you deal with that. So a part of risk management is following a trading plan. So before you take any trades, you need to know where your stop loss is going to be. Some people trade without stop losses. Good luck to them. I don't know if you could do that consistently. They use what do they call it? They use they use a, that's what they call it. They use a mental stop loss. So basically, if it goes against them and they're not liking how price is looking, they will close their position. Now imagine if you don't have that discipline and you just keep on waiting, keep on waiting. Price could go against you a lot. Simplest thing is to take the small loss. Take the small loss, come back the next day and trade again and you're back to break even, rather than just losing your account with your mental stop loss. So for me, at least, I trade with a stop loss. I know where my TP is going to be. Before I take a trade, I know the account size, I know how much I want to risk on the account size. So it could be 1% per trade, and I'm looking to make 0.5% in terms of TP, or I could do a 1-to-1. It varies depending on my setup, but typically that's what I look at. I look to risk about 1%, and I'll try to make 0.5% as a minimum in that day, and I'm okay with that. Yes, because if you got a 60k account, 1% is $600, 0.5 is $300. If I do one trade a day, $300, 3, 6, 9, 12, 15 a week, 1500 a week. In a month period, 20 trading days, I will be able to make 10% on that account, assuming I have a 100% win rate. So that's very achievable just on 0.5. Okay, so what I would recommend is you start slow. As your account grows, you could then increase this account lot allocation if you choose, if it's a part of your risk management, or you could slowly grind it up. Okay, really, there's no rush. You really need to focus on how much you are willing to lose per trade, because you will take losses, and having a strong, solid risk management will help you with that. So bear that in mind. If you haven't already, all of this should be in your back testing. Okay, so before we take a trade, we develop our trading plan based on our back testing. Okay, so if you haven't already, get that on. So okay, so one more tip for you guys. Pairs. Okay, so focus on 1 to 2 pairs, okay, or instruments if you want to trade indices. And the reason for this is just so you learn the behavior of the instrument you are trading. Okay, if it's a currency or indice, they have peak periods. They have periods where they move in high volume. They have periods where they're slow. You need to know all these things, and the best way to do that instead of trying to learn all of the pairs and how they behave, is just to focus in on one or two. I typically trade Euro USD and GU, okay, GBP USD, right? And the reason is because they move during the period I like to trade. They tend to either run liquidity on the Asian session, either the highs or lows, or they consolidate and wait, and particularly just whatever. Basically, I know their behavior because I've traded it multiple times. I know if it's a pair that likes to run liquidity, or a pair that likes a trend, or if it's a slow moving pair. You need to know what its typical behavior is. If you do, it gives you a little bit more breathing room. You know if price is working, moving in your direction. You know if you need to cut your loss early. You know if you need to take profit early and stuff like that. If you could just focus on one pair, okay, it makes things a lot simpler. So this is the 6 little tips I'm going to give you guys, or things I think you should be focused on. There are other things to bear in mind, and you could develop your own trading plan through back testing. Okay, so back test using your strategy, record all your data. I've recorded all my data since I've started, and even when my strategy or my setup changes, I've recorded the win and the loss rate on all of it, so I know if it's a strong strategy or not. I know what I need to do to make adjustments to increase my win rate and so on, because I have back tested and I've recorded my data. So something you should bear in mind and something you should consider. So none of this is recommendations. This is just a little guide for you to move in the right direction. Okay, so I've got my trading plan. I am ready to take trades. So what we're going to do now is go over to the charts and have a look. I had a look already. There was nothing in the morning, so I'm going to have a look again now, see if my setup is available. If it is, I will be taking the trade. Okay, cool. Okay, so as I've said, I haven't taken a trade yet. There was, as I can see now, my setup was available this morning, and there was a setup yesterday. I wasn't able to trade yesterday. This was the entry. I wasn't able to trade yesterday, so I missed out on all that. It's okay. It was a Monday. I didn't expect much to happen. I was busy, but it's okay. When we are not in a rush. And then this morning, my entry again would have been here. I'm going to show you my setup so you can see why my entry would have been here, and I'll also tell you why I didn't take this trade. Okay, so I saw this but I didn't take it, and I'm going to show you why now. So H1, quickly, we are trending up. Yes, I trade supply and demand. So demand is the lows really. So where price was bought up, when price comes back to there, the demand rate pushed up from, this is the entry points for it to be bought up again if it is trending up. If it's trending down, it's the reverse. So sold here, it pulls up here and sold here again. So when price pulled back into this supply zone here where it sold from last to break this structure, yeah, remember it's trending up here and it broke structure here. So someone here really wanted to get price lower. So when price came back up there, they sold it again. Okay, so that's the way I see it. So sold again for supply and it's pushing down. Okay, so that's what I know about supply and demand. You sell at highs, you buy at lows. Very simple. Okay, and it's universal. So that's what my strategy is based on. A lot of people trade this in different ways. How I trade it now is my preferred setup. I showed you a lot of different ways of doing it. There's one of my ways is approaching. I should really consider it, but I may not do it. So I just show you one of the ways you would have seen on the channel is trading imbalances based on order flow. So a lot of pending orders here to send this here down. Some of the pending orders may be remaining. So when price gets here, we expect a quick reaction. Now that could react and go all the way and take all of this, or it just give a quick reaction, and usually I just scout that for 10 pips. Okay, I stopped doing this not because it doesn't work. It will give you a decent win rate. It's like 70% win rate, but I stopped doing this is because it's just not visible daily. Okay, a lot of times with this pair it cleans up its inefficiencies and moves on. So you can see it pushed up here, came back, pulled back in it, pushed up there, came back, pulled back in it. So it's really clean, you know. So it's rare that we get these imbalances like this. Okay, so I should trade this and may consider it, but it's not a part of my trading plan, because my trading plan is to focus on this one setup, which is what I'm going to show you. And the reason it is to focus on this one setup is because it's visible daily, and then therefore it gives me opportunity to get a scalp per day, and I don't need to look at over leveraging on one move or anything like that for a scalp. Okay, so my setup, I like to see price trending in one direction. Yeah, trading with the trend, as you know, right? I do not try to jump in with the trend here to take this further down. I like to see the reversal of the trend and start going in the other direction, because I want to get in here at the lows. Why? Because my stop loss is going to be here, where it's nice and easy to manage. I'm not going to get in here to try to sell it here, put my stop loss here, see price going against me, then move my stop loss again, then move my stop loss again, move it up here and get run out. I want to place my stop loss in a place that I'm not going to touch it, because if it does come and take me out, it's taking me out for a reason, and I'm going to accept that loss. So this is where I can accept that loss. The other reason I trade this setup, so it helps me in terms of risk management, but also it makes sense. Okay, when you see a trend here, as you know, most people trade with the trend. So people are trailing their stop losses, placing it on these previous highs. Yeah. So when it gets here, it fakes like it's continuing. It pushes up, flags, and pulls out. That's the start of the new trend. When you get a fake, a push up, a flag, this low just respected that low, and pulls up again, and it reverses. That's a little reversal on a 5-minute time frame, and it starts pushing up. Okay, so it then runs the liquidity here. So this is something you need to remember: for money to be made, someone's lost money. So this is why this trading strategy works for me, because it makes sense. It just ran all the liquidity from the Asian session. This was the start of the London session. London session ran the liquidity of the previous session. It makes sense. It ran yesterday's highs. It makes sense. And it's heading to where? To that supply zone, that inefficiency I pointed out up here. Okay, so if you are in this trade, you could hold it to there, but it's not going to be a smooth ride. Okay, so this setup here, where I saw it yesterday, if I'd got in, I could have held it there, but as you can see, it's going to be a bumpy ride, and that's not for me at this stage of my trading journey. I prefer to get in and out, make the money, and done. In the future, if I'm taking one trade a day, I will happily take a trade there and just leave it to go to my destination. Because right now I'm developing my skills, learning how to read the charts better. You know, this is 1 year in, and the first year I spent a lot of time doing a lot of bad, silly things with indicators, learning how to lose money, and now I'm learning how to read the charts with no indicators and actually make money. So I'm focusing on that, on scalping for now, but in the future it could be swing trading. So this works in any trading style. Okay, so that is my setup. So I like to see price trending down, fix like it's continued, breaking structure, breaking this high, and then going in the opposite direction. Therefore, my entry will be here as soon as it breaks this high. If it's flagged and it breaks this high, my entry is right there. You've seen my tons of examples, live trades on my channel. So if you don't know what I'm talking about, have a look. But that is my setup. My stop loss is underneath here, and my risk would have been 8 pips in this situation. Really nice, because right now it's run about 35 pips. I would only scalp the 1-to-1 8 pips, so it doesn't make a difference. But that is my setup. I have missed my setup, and why did I miss my setup? For this reason: I saw this trade, it was trending down, it gave me everything I wanted to see. I know it's trending up, so this trend down was just a pullback on a major time, on a higher time frame. It would just look like a little pullback. The reason I did not enter it here is because of these equal lows. This equal low with that, 3 equal lows. I do not do equal lows. I do not do triple lows, triple highs, equal highs. I don't do any of that. Why? Because typically stop losses are underneath here, and price could easily just run it first, then go. So that's what I was waiting for. I was waiting for price to get underneath here, then pull up and go, but it didn't give me that. so I don't take the trade, and that's why I missed out on this. It's okay though. I'd rather miss out on it than get manipulated and taken out and seeing the trade, because that will put me in a negative mindset, and that will lead to me taking more trades and not managing my risk appropriately. Tomorrow is another day, or later on this session, to be honest. New York could reverse this and take this, and the reason I think it could pull back further is because of this imbalance here. I have been expecting price to get here. This is where I would prefer to have entered. Okay, there's an imbalance here. Imbalance here. I was waiting for price to push towards here and do what it's done now from here. Okay, it didn't do that, and all I could do is wait. Okay, I'm just waiting. It's done it previously. It did it right there. That was the entry with that imbalance. That was the entry right there with that imbalance there, and this tagged into this demand based on this imbalance here. Okay, based on the resistance from this demand zone. Okay, so it tagged into there and moved off. So all I'm going to do now is wait. I assume this is London session is just starting kind of thing, maybe half an hour in. It may put a reversal in here and start pushing this down. If it does, I will be taking that sell because I'm selling from highs. I prefer to take this sell from here than take this buy here because of the liquidity underneath here and this imbalance. So if it does put my reversal pattern in here, I will take this trade and I'll scalp it, and I'm going to leave a runner to see if it goes down there. I do believe it's still going up, but it doesn't mean I'm going to trade it like that. I'm going to trade what I see, and it's all based on price action. So for now, no trades, still waiting, haven't taken no trades. We'll go wait for our first trade. I'm not in a rush. I know how much money I'm trying to make per trade. I've done all the work, pre-work before that, as I showed you with my trading plan, and that's what I'm going to stick to this time and try to keep things very simple. Hopefully this has been a lot of information of use for you and you've learned something. If you have, hit that like button, show the support, and I keep getting these videos out to you. Okay, this is Patrick signing out, and until next time, peace.